Hey everybody, what's going on? In today's video, we've got a couple more earnings to look at, but nothing too exciting. Some really important economic data still coming this week, so we'll take a look at that. Lots of charts to go through, of course. We'll take a look at some of the setups we're playing, and we've got a couple of new setups to look at. So, by the way, we put a lot of work into these videos, and it really helps us out if you go smash that like button. Go ahead, go do that right now. Thank you. All right, so I'm Kevin, and I'm here to help you make sense of all this. We do these videos every week to keep our members up to date on what's going on in the markets and to highlight fresh opportunities. We have a really cool community of like-minded traders, and members get to take part in our live streams and mentor sessions. So check out the link below in the description and come join us in our Discord. Here's a quick disclaimer. Everything we do here is for educational purposes only. We are not investment advisors, do not provide investment advice. All trading and investment decisions are your own and done at your own risk. All right, let's do this. So, earnings left to go this week. I think maybe tomorrow morning, EVgo could possibly be interesting. And then after the close tomorrow, skills, I think is probably about the most interesting one. And beyond that, I don't know. I don't really see anything else going on here. But in our economic data that's still to report, tomorrow morning before the open, we have final GDP for Q4 of last year. Now, this is the third print, right? You know, the GDP, they do an early print, and then they do a couple more that revises it. But by the time you get to final, it should be kind of settling in. So I wouldn't expect any big surprises here out of GDP. And therefore, we shouldn't expect the market to do much unless there's a big surprise. The other thing that's up is before the market is unemployment claims, and that can always move markets if the surprises come in there. And I don't usually put Yellen speaking onto our reports list because it usually doesn't move the markets that much. However, she's you know, I don't know if she's losing it or what. Sorry, Janet. But she has been contradicting herself and other members of government. Jay Powell, the White House, and there's been a little bit of contradiction going on there. So I think that what she says is really important because it will move markets again if she contradicts what everybody thinks is government policy. So that's worth watching out for as well tomorrow. I think that starts at tomorrow morning at 10. On Friday, we have core PCE price index. That is really important. This is Jay Powell's and the Fed's favorite inflation measure. So obviously, if they're watching it closely, we got to watch it closely. The markets are going to be watching it closely. And it's very likely we see a big reaction out of the market on that. And that is in the pre-market at 8:30 on Friday morning. So that's the rest of our reports. So the important stuff, the most important stuff we've had this week coming tomorrow morning, or starting tomorrow morning. All right, let's take a look at our markets, major indices, international markets. We'll look at a couple of commodities and sectors and our setups. We'll get right into this right now. We'll start with the S&P 500. This is the SPY ETF. All right, so you can see we have been winding up in this little triangle, consolidating in here, doing, in my opinion, doing incredibly well in the midst of a banking crisis. Now, I mean, granted, the banking crisis is finally starting to, appears to be easing. Everything seems to be under control. We haven't seen any new banks, report that they're close to failure or anything like that. And with any luck, fingers crossed, we can get through this without any more damage. Now, as we look closely at the SPY ETF here, you can see we had this nice big gap up today and a little tiny narrow range. The range on this day is just it's ridiculously small. What did we get? We were about 0.5%, not including the gap. I think we were about 0.5% today from the low to the high. And you can see right here, our normal, whoops, get out of there. Right down here, our normal range on an average day is 1.75%. So very tight range day today. Nice to see that we got up through this downtrend line. We got up through an older resistance line. But this gap it's leaving behind here is a little scary. I think we're going higher, although we've got that data in the morning and that could change everything. But this looks like a really nice setup to continue higher. Certainly up into this gap and test this resistance level here at around 407 to 408. And yeah, we'll see where that goes. Let's take a look at the Qs. And you can see that the Qs have come right up into a resistance level today. Also left a big gap behind. Not outperforming as much as they were. Oh, I want to show you a new addition to the charts here. I've been bugging eSignal a number of times over the years to build something in, build an indicator in, where it just constantly displays whatever ticker you're looking at on the chart relative to the SPY. So we can see whether we have a relative strength or relative weakness to the SPY. It's a fundamental piece of the puzzle, I think, especially for swing traders. Is this stock or this ETF I'm looking at stronger or weaker than the S&P 500 right now? And the S&P 500, of course, being the market or our proxy for the market. So let's take a look down here. So you can see that the Qs had outperformed in the first part of this up leg, and the latter part of that up leg and then the sideways and even a little bit of this down. The Qs performed pretty much exactly the same as the S&P 500, as the market. And you can see as we got into the later stages of this banking crisis, you can see that money started to flow into the Qs. And we saw that into the FAANGs, basically, into mega cap tech. A flight to safety there. And then once things started easing off a little bit, there was less fear in the market. You can see that the NASDAQ has been at about equal performance with the S&P 500 now. And I think that's good. I think that's healthy. It's showing that we're in a healthier place right now. Because when we're seeing these up days, the rallies are more broader based. It's the whole market. Like breadth today was fantastic. And breadth on New York was 6.42, which is a really big number. That's good. That's a very broad-based move. And on the NASDAQ, it was just around about 6. So we're seeing good stuff here in the markets. And if we look at IWM, we can see that it has had a pretty decent day. Now, obviously, the IWMs, where all those banks were, all the regional banks anyway, had a really big move down. Not really outperforming yet. I mean, a little bit of a turn up here, so that's good to see. This candle today is interesting. Pretty much a hammer candle there. So that's good to see. It'd be nice to see this come up, one more level up into this resistance level here, and then go sideways for a bit. But I'd like to get away from these lows a little bit farther before this goes into a sideways consolidation. Let's take a look at the volatility index. We're seeing positive action here. You can see, we've come down. We've come down below 20 and for the first time since the crisis started. And you can tell when the crisis started because it's got these two giant green candles on the volatility index. And let's take a look at our 10-year yield. And this is kind of just chopping around sideways now, so that's fine. It's moved up. It's ground up a little bit, but nothing really to see there or pay too much attention to there at the moment. How about the dollar? So the U.S. dollar index, it is chopping around sideways. Can't really get back up through that resistance level, which is great to see. Not really falling down either, but that's fine. All right, let's move on to our global indices. We'll look at ACWX. This is the all-world index less the United States. And you can see we're in a nice short-term uptrend here. Recovered nicely from this crisis. and basically back to almost where we were before it started. So that's great to see. EFA is Europe, developed Far East, and Australia, and pretty much the same thing here, right? I mean, the crisis started, we were up around here when it started, we're almost right back up there now. And considering some of the weakness in the European banks, it's good to see that we've come right back up to that level. Emerging markets, ex-China. Not quite as much strength here. These are the more risk-on places to be, and we aren't going fully risk-on quite yet. So it's not a surprise that this is lagging some of the others a little bit. And then finally China. This is China large cap, and we've seen a lot of stuff going on there on like BABA, lots of news out of BABA, and a really big move out of BABA too over the last couple of days. But starting to trend back up again, which is nice to see. Coming into this former gap, though, that could act as resistance. All right, let's take a look at gold. So gold is halted in its climb as the crisis has abated, but it's not really falling down either. And I'm sure any of the gold bugs that are technicians are really liking to look at this pennant right here, this bull flag, and expecting that this will go much higher. I don't know. I think the jury's out on that. I don't think it is going much higher now, unless this crisis reignites, or unless inflation fears rear their ugly head again. Neither of which I really think is going to happen. So I think that gold's days are numbered here. And we could see this fall out the bottom of this pennant rather than go out the top of the pennant, which is what we would normally expect to see in that kind of pattern. On the other hand, though, the miners continue to climb up, which is really interesting. They were lagging behind. So gold was climbing rapidly, and the miners were doing, kind of chopping around, going sideways. And now the miners are really starting to play catch up and to climb up as gold stalls. So I don't get it. I'm really not sure what to make of this. Is it a false move in the miners? Are they wrong? Are people trading the miners wrong, and the people trading gold is correct? It's hard to say. Let's see. How's silver doing? So silver, coming up into a important resistance level here. You can see it was acted to support so many times this area while it was consolidating up there, and now we're right back into that again, and so far unable to get through it. I think if it did get through, and I'm kind of not expecting it to, right? As I think the shine is going to come off of these precious metals, but if it did break through, I think this could be a pretty strong move, and very quickly move up to the very least to the top of this range at 2450. Maybe even have enough momentum to blast through that. But again, that's scenario B. The scenario A, the most likely scenario in my opinion, is that this starts to roll over again fairly soon. Copper. And you can see that this is consolidating to some minor resistance level there, really minor resistance level that it's consolidating under. So it'll be interesting to see what happens with that. And copper is not terribly correlated with the precious metals like gold and silver. Copper is more correlated with our sentiment for the economy. Let's take a look at oil. This continues to be a bit of a choppy mess, although grinding higher in a bit of a choppy fashion. A little bit of, we had a big green candle earlier in the week, Monday I guess that was, and now, slowing down here. Nat gas continues its decline. Just a nice smooth downtrend here. It's come right into this previous low and bounced there today. So, is that going to hold? Is that going to end up being a really important low right here? It looks to me like this is about to fall through here. Where do we go if we fall through? I mean, we've got, well, I haven't even drawn any levels in down here yet. There could be a level around there. Yeah, I have to take a closer. I'll get some levels down below on this chart, but I think 163-ish Probably the next stop if we lose this 196. All right, XLE, the energy ETF. This is grinding higher as well, but you can see we're coming into that declining 200-day moving average and some pretty strong resistance just overhead, or what had been fairly strong support. When it broke, now it should become strong resistance. Yeah, I'm not sure. It seems like XLE is outperforming crude, which is another sort of interesting divergence. Let's move on to our sectors, all our major sectors. We're starting with consumer discretionary. This continues to be a bit of a choppy mess. Let's move on to industrials. These had a really nice recovery off of this. I think on the weekend video I mentioned tagging the, we tagged the 200-day moving average and had a really nice bounce off of that, and that continued this week. But coming into what is probably going to be a strong resistance area. It's good to see some recovery in here, though, because this was a pretty sharp decline that this had. So wouldn't be surprised if we can't get through this resistance level here, that we just kind of chop around sideways for a little bit, build some strength to get through it. XLF Financials. Obviously an important sector right now. We are continuing to chop around inside this range. It looks like the range may be tightening up. I don't expect to see us, make any big moves out of this range just yet. I think this needs more time to go sideways. XLV Healthcare. This has gotten back up into that old channel above some resistance levels. But not looking entirely healthy here. However, biotech made a nice move today and off this low here. Got above this former pivot. So this doesn't look so bad right now. And if biotech can get some momentum here, that will drag healthcare up as well. Some of our defensive sectors, XLRE REITs. We can see some movement off the lows here. XLP Staples, and we can see that this is grinding up very slowly after breaking out of a range that it was kind of trapped in. But not a lot of momentum there. And, with this being a defensive sector, I'm fine with that. XLU Utilities. And it's also grinding higher off its lows. You can see that kind of put in a double bottom here, or potential double bottom. We can't call it a double bottom yet until we make a higher high. We've got to get above this level. Then that would confirm this is a double bottom. But that it looks like that's the case. We'll see what happens when it gets to this 50-day moving average, though. You can see it failed at the 50-day moving average the last time it was there. XOK Technology. Some selling wicks here, some little pullbacks, a hammer. It's a little bit messy. Nice candle today. Left a fairly large gap in there, but couldn't get above those two highs. I mean, got right to them, right, and pulled back a tiny bit. But it did close very near the highs today, and I think we at the very least go up and test this resistance level here at 148.65. Will we get through it and then come and test this pivot level here? I should actually draw that one in, because I think we are going through the initial resistance levels, and this pivot here will probably become important. So who knows? Maybe we get to see a move into here before the end of the week. That sure would be nice. XLC Communications. And you can see that this is just chopping around here, unable to get above these resistance levels, this old trend line, but not fully closing the gap that it left behind either. Really tight little ranges on this too. So this is kind of interesting. If this does break out to the upside, you could probably expect a fairly explosive move. Probably the same goes for a move to the downside as well. If you break down below the low of this gap and below these moving averages, I wouldn't be surprised to see a fairly quick move, certainly to the 200-day moving average, maybe even lower. SMH Semiconductors. These had a few bad days. They were having a few rough days, put in a little hammer candle, which you can barely see there. I'll zoom in a little more here. A little hammer candle there on a break below resistance and into that former channel and the 21-day moving average, and nice gap up today. Takes it back to the to that range. I think we're gonna have to expand this range out a little bit, but these look to be going higher. However, I mean, some of the bigger names in there didn't do so good. You can maybe look on your own at AMD and NVIDIA to see how they did today. But I think this is mostly on the back of Micron, who had earnings yesterday and had a really nice move up today. Nice 7% move in Micron. Up into nearing a resistance zone, though. Really, an unfilled gap that goes way back into June of last year. That unfilled gap. So yeah, this is getting really interesting in here. You've kind of looking at all this, you almost have to expect some failure. But maybe this time it can come up in here, consolidate under here for a bit, and then break out. Every other time we've gone up near there, it's pulled back pretty quickly. So watch for a change of character. If this does go up in here and starts going sideways for a few days, this might turn into a play for us. So who knows? Maybe we'll be talking about this one again on the weekend in the weekend video. Okay, let's take a look at some of our FAANG stocks. This is Meta. This has lost its momentum, grinding sideways now. But still looking pretty healthy. It's had some amazing moves lately. So a little sideways action. Let's let these moving averages catch up a bit. I mean, look how stretched we are from the 50-day and the the 100-day moving average way down here. So yeah, it's allowed to rest a bit and let these moving averages catch up. Apple. After a couple nasty days in Apple, this had a bit nice turnaround yesterday with that Dragonfly Doji here, and nice big gap and an updated day, but still can't get above this, these levels here that is starting to look like fairly strong resistance. Let's go on to Amazon. Come on, here we go. So Amazon coming into resistance. Lots of moving averages below, good support below, tightening up nicely. Will it break out? You could see a pretty big move if it does. Netflix. Actually, we're going to save Netflix for later. This is one of our setups. We will go on to Google. Messy. Not sure what's going on with Google. I don't really follow Google all that closely. There's got to be news to account for what's going on here. It is way underperforming the rest of the market and its mega cap tech peers. But it is being supported by the 200-day moving average still. So this has got to sort of get up off the mat here and get going. Microsoft. And you can see that this has been chopping around in a range, kind of building a bit of a base, but it's a little messy. I liked it when it was tight here, and then you had this candle yesterday that just fell right out of it. However, it turned around in this strong support area, and printed a hammer, and we're right back to the top of the range. So. This one looks ready to break out. And I've got to say that, I was looking for potential setups. I'm seeing a lot of stocks that look potentially ready to break out. And in a way that concerns me a little bit. A lot of them have been unable to break out so far. And, if they do start breaking out, then they're kind of all going to break out. And we're going to be, wondering which ones of these should we play. But if they start to fail, I think it could get kind of nasty. So, yeah, I'm a little bit concerned about how many stocks are looking ready to break out like this, because they're also in a way set up to just, to reinforce resistance and then roll over again. Tesla. So there's another one, right? Chopping around in a nice tight little range. This one is putting in lower highs though, so that's not ideal. But, Tesla's the kind of stock that can just, surprise you and all of a sudden print, a great big green candle and break out of all this. Okay, that's all our FAANGs. Let's move on to some of the plays that were in HIMS. It is still going sideways, consolidating in this range, after its big pullback. Nice little move up here. I still think that a breakout out of the top of this range, or a breakout either way out of this range actually, leads to a fairly strong big move. But I am leaning towards a breakout to the upside on this one. DOCN, this is DigitalOcean. It is, brought this up in the week, I think it was in the weekend video. This is still consolidating nicely in here. When we were first looking at this, we had this nice triangular pattern, and now it's resolving to a sideways consolidation. But it's a pretty tight consolidation. We have a very, very well-behaved top on that, right at about $36. So still watching this one for a breakout. And Workday that we first looked at in the week, I think this past weekend video. We were looking, a couple of levels to you could have got in. Obviously, the big level is right up here, and your early entry was down here. Now, we were talking about how it would be nice if this came up to that level and consolidated in there, and I said, it's probably not going to do that. It's probably just going to burst through here, right? Because but I would have preferred it in there. But this held these gains intraday. It didn't flip intraday. It closed right at the highs, so that's really nice to see. I am in this one, by the way, and I've already moved my stop up. I'll actually show you on an intraday chart where I moved that stop to. I moved it very early on, so I got in right at within minutes of the open here. As this green candle here, when it came up here, pulled back a little bit, and once we got above this high here, I thought, yeah, this is going to go. So I got in right here on this candle. Really happy with my entry there. After we came up, pulled back a little bit here, and then started to grind here. Then I moved my stop up just to below this little pullback here. And of course, this is this is not a hard stop in the market. This is an alert. If it did come into this, I would see, what was the price action coming into it, decide whether it was going to exit or not. And I will continue to follow my stop up on this one. But I think there's more in it. I mean, obviously it's a little late to be getting in here now, because it skews your risk reward. But if you were going to get in, I mean, I think you just sort of buy the open with a stop under any of these swings. If you were getting in at the open tomorrow, for instance, I mean, maybe a stop under here, you want to have it fairly tight, would work. Or the stop under this level here. This, of course, is not investment advice. This is just for educational purposes. All right, let's move on to a new setup. I was actually going to bring this one up last week, and then with some of the weirdness that we had going on, during the week, I thought, this isn't the right time for any of the setups. And sure enough, what happened? I mean, it broke out nicely because I was looking at this pattern here, it broke out nicely out of that. I didn't take it, but it's setting up nicely again. I like this. I like it better this time, actually, because we did have a nice move on a breakout. This stock has shown it can have some strength and go, and it's getting really tight. Look at these two candles right here. They are indecisive though, which is a little scary, but it's consolidating tightly under this resistance level, and I think this could make a nice move if it breaks out. We've got just overhead. What are our levels? So I think you can move really quickly to 154 or 155 area. Right now, that breakout level is about 140, so that's not bad, right? That's just a little over 10%, 12%. And then, beyond that, if it gets through there, or when it gets through there, a move to 175 should be fairly easy for it. So, yeah, I think there's, obviously, this is, really good risk reward on this one. for even just for the move to 154, you're only risking, if you were risking initially just below these lows from 140 to 135.50-ish. So 450 to make 15. That's better than 3 to 1, or 3.5 to 1. So yeah, that's worth a play in my book. So I will be watching this one closely. And finally, Netflix, because this one always gets lots of attention. So I didn't understand this pullback in Netflix. It wasn't making much sense to me. It was underperforming all of the FAANGs, and you can see that it was underperforming, or had been really underperforming the S&P 500 since it started to consolidate up here. And maybe that was an early clue. Something was going on when it was consolidating sideways in here. The S&P 500 was actually going up, and that's why we see this relative strength line going down. Now, on this bounce, we're still not, we still don't have really good relative strength to SPY, but it's definitely improving. And I like that we've put in a couple of higher highs and a higher low in here. We had a bear flag here right under that trend line, that uptrend line. And I fully expected this to break out the bottom of this bear flag. Well, it didn't. It broke out to the top of that, and it made a fairly quick move right up into this old resistance level. Remember, this is the top of the the top of the old gap that this left behind, right, with that horrible earnings report. So it's come right back up into there, and it's consolidating. We would expect that. And look, the 50-day moving average right there as well. I think a move out of here gets us to 350 pretty quick. And maybe we get some decent momentum all the way up to 370 fairly quick as well. I think there's more strength coming in this one. So I think this one's worth a watch as well. All right, that is everything I've got for you today. I want to thank everybody for watching. Don't forget to hit that like button, share with your friends, and subscribe. And I hope you all enjoy the rest of the week and have a great weekend coming up. Good night, everybody.